Hi, my name is Jonathan Walton. I'm a director at Whitley Stimpson. With me is Alan Morgan, who's an employee in our Witney office. We have a few other Whitley Stimpson people here, including our HR manager, Tracy Williams. And what we might do is we might share some experiences of some of the things that we found through COVID. Some of the practices we're likely to change post-COVID, if there is a post-COVID, and some of the things that we've been looking at to reward our employees as well. So the thing that we were going to start with was the experience of COVID for us as a firm. And, you know, one of the things we had to initially think about was the people. We have 90 people in our organisation, over 4 offices. So Alan, in the context of how things were communicated to you, where did we start?
Well, I think it all happened fairly quickly. Now, casting my mind back to March, I guess we all knew it was going to happen, but when it did happen, it happened very quickly. Then suddenly you find on Tuesday, the whatever it was in March, we're all working from home. So, and it's not something that I had done an awful lot in the past. So you're thinking, oh, how is this all going to work? So I think the first thing that I noticed is how quickly the firm adapted to it. And I think one of the important things there was how agile the firm was, and it adapted to change very, very quickly. So I think it's important for a business to be very agile, and we had to all adopt new working practices in terms of meetings. We did them over Zoom, Teams, that sort of thing. And okay, there are a few perhaps glitches at the start, but we rapidly got over those and everybody worked together. I think that is important, that it's not just for the employer to get it right, it's up to the employee to say, yeah, this would be important to me. So I think a two-way dialogue is important. I
think that's very true. I think at the beginning, we were lucky to have 2 full-time HR ladies, and you know, one of the things that we had to do immediately was look at our policies and risk assessments, and that was quite a two-way street. It wasn't us sort of dictating. It was much more getting the kind of involvement of the employees as to what they thought was right as well, based on the circumstances. Because whilst it's easy to do health and safety and risk assessments in the offices, it's pretty difficult to go and do it in someone's house, isn't it? And there are people that haven't been back and can't come back to work ever since that original day when we kind of closed the office. But the communication, I think, has been quite key. How have you found that?
Yeah, I found the communication great. I mean, I have almost entirely been working from home. So back in total lockdown, the fact that we had 2 Microsoft Teams meetings during the day to start with, then we went down to 1. I really enjoyed that, because that was your time when you got to see the people that you worked with. And it became, yes, we did talk about work, but it was also just spending time and talking to people that you work with. That was invaluable. And I think also what you said there about HR, doing everything, and what came over to me is that the firm really cared, and it wasn't just going through the motions. You know, they actually walked the walk. And they really did care, and continuing going forward as well. You know, we're not at the end of all this.
No.
But, employers have constantly got to think about, it's changing all the time. So I think, working environment, your safety and well-being, it's people are serious about it. They're not just doing it because they have to. They're actually serious about the whole thing. In terms of returning to the office, I know that, I think the latest thing from the government is that the employer can now say, we need you to come back. But from my point of view as an employee, I don't feel under any pressure to go back on 1st of August. I see this as a conversation that I will have with my director, if it's right for both of us. And obviously that, I need to consider what Whitley Stimpson want out of me. And vice versa. So I feel it's very much a two-way thing.
I think you're right, and I think one of the things, I mean, we did have, well, we had weekly communications with employees, but welfare and mental well-being is quite important for us because we're a massive people business. Really, it's all we rely on people all the time, and our HR team spoke to everyone, and some people were kind of on their more kind of critical list, if you like, of people they wanted to speak to more as well. And I think that came over quite well. So I think the communication, and even when we had to furlough people, which is not nice, we furloughed roughly 20 people, I think, at one point, which is about a fifth of our workforce. It's not nice, and there's an assumption by the people that are kind of working that everyone who's on furlough is going to be happy because they don't have to do anything, but it really isn't the case. And all that was done very, very personally, wasn't it?
Yeah, absolutely. Yeah. And I think the things that I'm talking about that we see as important in COVID times, they've always existed.
Yeah.
They've always been there, but they've become more important and people have focused on them now. But I think these have been there, and it's not just my experience as an employee with Whitley Stimpson. I work with other businesses and talk to their employees as well. And these sort of things are important. Another thing that I think has come over in the last few months is more about the firm, more than just an employer. It's a family, and then you have the 4 offices, then you have the community within those offices as well. And I think that we appreciate those more now. They've always been there, but we appreciate that more now. I think leadership is important. That everybody, I think, in an organisation, people want to look to leaders, not to be led, and because you don't have a contribution, but people want strong leadership, and I think that's been present within the firm. And again, working with great people, one of the benefits for me is that probably I've had more interaction with people in the other offices than what I had previously, and we're able to fix up a meeting at short notice over Zoom or Teams, bring the key people into that. So we're possibly more effective in some things that we do. So that's a positive. Another important thing to me is that, I don't think anybody has all the answers. And the fact that as an employee, I feel that I can actually say something, to the directors, and is actually listened to.
We've always had a suggestion box, which is sometimes full of things with humour. But out of the suggestion box, even in the COVID time, somebody suggested that rather than having a pen and paper to sign in at offices, we'd use one of these nice electronic swipey systems, which we've now adapted in all offices, because we just feel that they're a way for the future. But I think the other thing too, post-COVID, for an employee perspective, is that I think we've learned that we've never really been a firm that's had a lot of people working from home, and in fact that many people at all working from home. It's been very much office based and at clients' premises, and that's changed. We've done. I think everybody had to work from home for a long time, and I think going forward the expectation will be that people will not have to go back to the office on a permanent 5-day a week basis. We were talking in our directors meeting yesterday about allowing people of a certain grade and level to work from home 2 days a week without any fear of being told they can't. And I guess at trainee level it's difficult. You've got to make sure that people that are trained, etc. But I think post-COVID, there will be a totally different way of working. And I think we've also accepted during COVID with people that have children and things that actually the start of the day is not 8:30 or 9 o'clock and the end of the day isn't 5 o'clock. I think we've learnt that much more so than we would have done as a traditional accountancy practice that's used to dealing with clients on a 9 to 5 basis. So I think
people appreciate the flexibility, Jonathan. People, in my experience, they're fair. If they're going to do something, that doesn't mean they're working, then then they make up the time. It's a more adult way of doing things. So, and I think in terms of, as you say, the times that we're in and going into the future, you look at people like, I think it's Google have said that they're expecting their employees to work from home well into next year, and I think this is something that
And you can
have just got to accept. I'm afraid it's.
You can contrast that to other people. I know someone who works in Chelsea Harbour, and one Friday or Thursday was told, Monday coming to work, and they've got to commute from Bicester into London on the train, and then they've got to commute on the tube, and it wasn't, but they worked from home quite adequately well, and for weeks, but that was it. It was sort of dictated to them. They had to come back. So, and that was quite a few weeks ago before the government were very, very excited about it. Let's just move on a little bit to how we are looking at kind of rewarding employees as well a little bit, and some of the ways that people in HR can talk to the directors of their firms or their owners of their firms about how we can reward people going forward. I mean, I'm going to talk about some of the things that have always been around, and benefits in kind and things like that. And then I'm going to have a little chat about share schemes, because there's been a growing number of share schemes, and there is a reason why now actually they're probably more attractive than they've been for a long time. And that's because some companies have got a sort of slightly lesser value at the moment than they've had in the previous 2 or 3 years because of COVID, because they've seen a dip in EBITDA and they've seen, dip in the net asset basis. But we'll just have a quick chat about some of the benefits in kind. So some of the things we've looked at as a practice, so I can share some of our experiences, and Tracy Williams is our HR manager. She can correct me when I get the figures wrong. But some of the things that we've been looking at bringing in as a sort of medium-sized firm is, historically, we've never really had a benefit in kind system. We've kind of paid people a salary, and we've had things like childcare vouchers, which have been quite common. But over the last couple of years, we've focused on what we think our employees want. We ask them what they want. We did a survey, and so we've started to respond to some of the things they've asked for. So one of the things we've been looking at, which we will be introducing. We discussed it yesterday. It was supposed to be introduced in April, but it was put back for obvious reasons. But one of the things we were looking at was the private medical. And one of the nice things about the private medical is, of course, the more people you have in this scheme, you tend to find the premiums are less per person. And, just to sort of put things into context, for 32 people that want to join our scheme, because some people are already covered through their spouses, et cetera. But for 32 people that want to join our scheme, for things like the private medical, which includes the GP referral, the mental health, the dental, the premium for that is about £7,000. It's not prohibitively expensive. Now, of course, there is then a benefit in kind on the employee, and we would expect our employees to pay for that benefit in kind. But some people's premiums are vastly different to others. I mean, I'm very old, as you can see, so my premium tends to be higher than some of my co-directors who are sitting here muted. They're much younger than I am. So I think that's a very good mechanism for what I think is not a huge cost for that number of people. The other thing we've looked at, which we're introducing, and that's being introduced, I think, in a couple of days' time, is a death in service benefit, which we've not had before. To put the numbers into perspective, we'll have 85 lives, if you like, insured on that. And the payout on that is either sort of 2 times to 4 times salaries. So it could be anything between 50,000 up to sort of 400 or whatever it could be. The actual cost of providing a death and service benefit, and we're not financial salespeople, so we don't actually do this. We had to go and get quotes from brokers ourselves. The actual quote for doing that was £9,000 to keep 85 people happy. And I don't think that's a particularly expensive product. And one of the nice benefits of that was that there is no benefit in kind on that for the employee, so they don't suffer any cost themselves. The other things we've looked at for some of our employees, we've always done a pension sacrifice where they save on the employee's national insurance, and whatever the employer's NI has been that we would have had to have paid had been a salary, we've always pop that into their pension pot. We've done that for decades, I think. Childcare, I mentioned, we've always done that. We've been looking at the cycle to work scheme. Alan asked me earlier if I wanted a bike that cost £5,000, would that be okay? And I said, well, in the old days, there was a cap on the value that you could buy. That was £1,000. There isn't a cap anymore. But of course, if Alan wants a 5k bike, and there are another 72 people who want a 5k bike, I'm not entirely convinced we can afford it, so we'll probably put a cap on it. But they're a nice scheme. Effectively, the employer They buy the bike and they kind of lease it to the employee. But there's good tax and national insurance savings on that too. Some of the things that people may not be aware of, things like bus journeys. If you have employees, we have an employee that gets the bus actually, but bus journeys, the employer is allowed to pay for the bus journey in full if it's not more than 10 miles. One of the things that we spoke about during COVID, which is something all your employees can get back, is there's a working from home allowance. Now, we're not going to pay anyone a working from home allowance, so it's not going to come out of our pocket as an employer, because quite honestly, everyone's saving a fortune on petrol and driving to the office, and obviously on the time. But our employees, and anyone actually, doesn't matter whether they prepare a tax return or not, they are entitled to do a claim, and it's £6. It's actually, I think it's £6 a week, I think, from memory. And over the period of COVID, some of us have been away for 20 weeks or so. And so if you do a tax return, you would claim that through your self-assessment tax return. But if you're not, there's a form that employees can download from HMRC's website. I think it's called P87. That's quite useful.
Jonathan, just on that one, if someone is part-time or they're coming in for say 1 day a week, but then working the rest at home, do you pro rata the £6?
I would pro rata it, yeah, because it's a fixed allowance, so I think it assumes, it assumes, I think it assumes a regular working week.
Okay. Just going back on what you said about the private medical and the death in service, again from the employee perspective here, this was you announced all this as a firm just prior to COVID. Then COVID happened and everybody fully understood that, okay, we're not going ahead at the moment due to all the uncertainty. But the fact that it came back on the agenda, for me, what I thought was very quickly was really another demonstration of the type of firm that I work for, that that was a surprise that it came so quickly due to, I mean, there is still uncertainty, but the fact that, and we're all uncertain about the future, but the fact that there was positivity coming from my employer, that was a real good feeling.
I think we just have to adapt as time moves on. I mean, last week, one of the guys, young chaps in the office in High Wycombe, disappeared to Spain. And I think as he was on his way to Spain, the government were making their minds up that the minute he got back, he'd have to, self-isolate for 14 days. And we're just having to go with the times. And he's lucky. He works in a job where he can work from home. I know there are people that don't, and I know how difficult it can be. So other benefits and things we've looked at and we've brought in over the years, we've had long service awards. We're very lucky to have a number of people that work for us for a long time. So I think most people may know that for 20 years service, you can do £50 per year. So it's nice, £1,000 going out to someone. Some offices of our firm have had birthday holidays. We're trying to align them all so that I think those are nice things as well. Suggestion schemes, we brought a suggestion scheme in years ago actually, and they all came to me. But there is actually a way that you can, for sort of like the leading suggestion of the year, you can pay a £5,000 tax-free sum, but you can also have a suggestion box where for anyone who provides encouragement or suggestions, they can get £25 per suggestion. I think those are quite good. We all know about staff parties. We were talking about Christmas party yesterday. Probably very difficult to get 150, 160 people together at Christmas in an indoor environment. But I mean, the values that for staff parties are £150 per member of staff. Unfortunately, if you go above that, you get taxed on the whole thing. So if you spend £151, technically the whole of it is an issue. So try and keep below that 150. But we'll probably have a summer party instead of a Christmas party, and we'll probably do things at local office level. And there are trivial benefits. So you can give employees 50 quid at Christmas, so to speak. And for some reason, directors are allowed to get £300, which I think is grossly unfair. I don't quite know why that's the case. I think,
in terms of those trivial benefits, Jonathan, is that just you can do more than £50? It's not just one lot of 50. You could do more, but it can't be as a reward for work. Is that right?
Correct. Yes. Yeah. You can't be as a reward for work, otherwise it's subject to PUE. Now, one of the things that our tax lecturer got very excited about, so we have an external tax lecturer who comes to talk to our employees and our directors, was the concept of the electric car. And for anyone that offers cars for their employees, or for the directors of their business or owners of their business, you'll probably know that in the old days, the benefit in kind rules, they kind of crept up and up and up, and they were all based on list value. And even if you bought a second-hand car, it was on the original list value. And to put things into perspective, if you have a Mondeo, which is a nice car, you could end up with a current benefit in kind for the car of about £3,500, and a benefit in kind for the fuel of similar amounts. And then there would also be a Class 1A national insurance payment that the employer would have to make. So it's quite a costly thing to run around in the car. And the thing about cars of that nature is that the employer doesn't get great capital allowances on it either. Now, purely electric cars, now they tend to be a little bit more expensive, but there are some pretty decent ones around now. And I've suggested to the board at Whitley Stimpson that we might like to entertain this as an idea, and they all kind of looked at me and shook their head, but I think they said yes. Because one of the nice things about it is that if the company pays for the car, the company gets tax relief on it, and it gets 100% capital allowances if it's a fully electric car. So to put the numbers into context, not that I can afford the Jaguar I-Pace, but I do think they're quite attractive. And they're, say, a £50,000 car for argument's sake. So if my employer, which I'm a director shareholder of, if that bought that car, we would get an automatic tax break in our first year, because we would be able to claim the whole of that 50,000 against our profit. So that's £9,500 worth of corporation tax saved. So technically it's costing the employer £40,500. So I could then take out pay my employer back for the lease. So rather than have my salary, which is obviously subject to national insurance and subject to employers and all the rest of it, and subject to whatever tax bracket I'm in, I can then say, well, as a salary sacrifice, I'm not expecting to get any more out of Whitley Stimpson because we earn certain amounts of money, but as a salary sacrifice, I'll take my car payments as part of my salary. And it's a very, very efficient and effective way to do it. Hybrid cars, not quite as good. There's still benefits in kind on those. So the one thing I wanted to touch on at the very end was I just wanted to talk about employee ownership of shares, which is something we've done quite a lot of work with in the last 3 or 4 years. I think it's obvious why people introduce share schemes. It's really the recruitment and to retain talent. There are a stack of schemes available. I probably don't have time to go through all of them, but there are ones that are Inland Revenue approved, so they cover some really good tax breaks. So things like that are things like share incentive plans. There's save as you earn schemes, so you save a bit of money, buy a pool of shares. The two that I come across the most are an EMI scheme, which is Enterprise Management Initiative Scheme, for which we've implemented quite a lot over the years, and one I've recently done called a growth share scheme. And the EMI scheme, most small businesses can do it. There are some activities that are excluded from participating, but the point of it is that the employee has an option to purchase a share at a set value, say today's date. That option will last for, say, 10 years. And the employee doesn't actually have to part with any cash. I mean, they can do, but they don't have to part with any cash. And what they're effectively getting is they're getting a promise for some shares at a future date. Now, these schemes last for 10 years, and the reason for that is that people normally introduce them because they've got either an exit mechanism for the current director, the current board, and they say, well, within 10 years, we're likely to sell. And what they're saying is, well, when we do sell within those 10 years, if we've offered you EMI schemes, you're granted an option to have them. You can then exercise the option at a later date. What normally happens is that, so the value of a company now, for example, could be £500,000. The company grows and grows and grows and grows and gets sold for, say, £2 million, just to keep the numbers straightforward. The person has technically bought those shares at £500,000, but not paid for them. And when it comes around to the exit, of course, they're getting the 4 times increase in value. And what happens is the purchase cost that they were having expected to pay comes off their sale proceeds. So the employee doesn't always have to part with any cash at all. And they're a wonderful scheme because not lots of employees, they want to earn as much as they can through the PAYE system. They've got mortgages, they've got families, but you won't get that money. You will not get that reward unless you're still there. So usually what happens is that the minute an employee leaves, the shares are kind of cancelled, if you like, because the employee's not had them. But an employee can exercise them as they go through the life of those 10 years. And we've got schemes where employees have done that. And we've also used EMI schemes for eventual management buyouts. So the existing management team have been drip fed some shares through an EMI scheme, and then they've been able to use that to then take some further shares forward. The other one I wanted to talk about, which I've only done 2 of these, and I don't know why we don't do more of them, because I think they're actually very, very good. And they're called growth shares. And so just say, for example, at the moment, our company is worth £500,000. What I can say to someone I bring in as a new shareholder, I can say, look, this is the value of my company today, because we get it valued properly. The value of my company as it is today really belongs to me and my other shareholders. But I'd like you to participate in the growth from the date that we offer you this option. And so as the company grows and grows, the value hopefully then goes up. And, of course, what we're expecting is either for the employee to be able to exercise this growth share through a sale but sometimes you can use these growth shares just to over people's lives within a firm. And if they retire, you can then have the option to have the growth share. And these are the EMI schemes, and the growth share schemes are very, very tax efficient because they're subject to capital gains tax on disposal for the employee. So that's usually, well, it's still at the minute, at a lesser rate than an income tax rate. There's never national insurance on these types of schemes if they're the approved type option schemes. And they're just wonderful ways, really, of locking an employee in for the longer term, because some employees can see how dynamic their owners of the business, or they can see that the owners of the business are of a certain age and there has to be some level of succession planning. And the cost of implementing these types of schemes is not that much. For EMI schemes, you're looking at having to do a valuation and then doing the inland revenue clearances. It can be £2,500. And again, as I say, when the shares or the options are issued to the employees, there just isn't a payment that they have to make. But it's the feeling of the belonging and the feeling of the importance and recognition of ownership that actually some of the employees find very worthwhile.
So are you saying it's a good time to be looking at those type of things at the moment?
I think it's very, very
because of the potential low values of business, that there's more potential growth for the employee.
Yeah, absolutely. And we've got businesses that are flying at the moment because they just happen to be in the industries that thrived under COVID. But the general picture is not that case. The general picture has been that some businesses have got a declining turnover. They are slightly worried about their futures, and they're not really in a position to provide great big bonuses to staff and things like that because there's not too much cash around, and they've had to borrow. They've borrowed. They've furloughed people, so they've had that, and that's fine. But they've also taken some of these banks back loans and these COVID loans. But things like this, there's of course, you've got to get an accountant or a lawyer to draft up the paperwork, but it's pretty routine, standard stuff. One of the other things about EMI, I should just say very briefly, is that you can link them to performance benefits. So I could say, we can't do them because accountants aren't allowed to do EMI schemes, but a client of mine could say, if you add £400,000 worth of income and the gross profit margin is 30%, we will give you 2% shares in the EMI. And we've got quite a few performance-based EMI schemes. And I think that's really all I wanted to say. So I don't know if anyone has any questions for anyone, because I'm 1 minute over. I can hear birds in the background where someone is. Do
we have to encourage people to take their mics and cameras, mics on and cameras on? And
I've tried to rattle through things as quickly as possible, and I know I do talk quickly. But if anyone wants anything, then you know where to find us. So we're obviously B4 members. If anyone ever wants just to talk to our HR team, we do outsource HR, not very often, but we have a number of clients who like to talk to our HR team. Tracy Williams, who's here on the call. And in terms of any benefits or, looking at how much a car might cost for or how much a share scheme, how that would benefit, just be in touch with us, please.